Hello, my friend. Welcome to the True Secret Sauce series. Today is May 25th and a very interesting day in the oil market. I have not done any trade in the oil market, but I wanted to document my thought process behind how I would be entering this trade. And I am thinking of going a covered stock. Why? Because first thing is oil, the price is only $10, not like Amazon where it is like $1,000 and your capital requirement is less. It also has a relatively high IB. So let me first go through the stock charts and decide if I will be doing the trade. First chart, I'm looking at the Bollinger Band as I was mentioning, which is the first quadrant, and I noticed that from the upper Bollinger Band it has fallen off nice and clean, but still it has not reached the bottom of the Bollinger Band, which is about 9.8. Recall that the price is about 10.10, so 10.04, and the bottom of the Bollinger Band is about 9.8. So still it has some room to go down, and that is confirmed by still the Bollinger Band RSI on the higher time frame has not reached the bottom. Just want to show you one another thing, that although the Bollinger Band has reached, look at in the past, whenever it has touched the Bollinger Band in the bottom, it just keeps falling for a little longer. Same thing here, same thing here. So this, if it touches 9.8, who knows, it could just go down further to 9.4 or 9.5. This is an information that I'll carry along as I make my decision process. Here I am looking at the moving averages. The yellow bar is the 200-day moving average, and we are way below the 200-day moving average. So the oil market is in a bearish mode, and if you look at it, there's a dramatic fall here, and all the moving averages started turning further down. So which means that also confirms that further downside price is ahead. So we might be talking about 9.4, 9.5, where there are some sort of resistance. So again, this is my second confirmation that the price fall is not over yet. Now let me go to the third one. Third chart is the monkey bars, which is a typical classic. If you look at it, this is what is called a triple distribution. For some news driven event crushed the oil market, and what has happened is the prices started falling, everyone started selling in a rush, and there was no time even for breathing through. So you had the double distribution here, there is another distribution here, the market has started falling off. It opened here, and where did it end? It almost at the bottom of the chart. This is a typical triple distribution, which means a strong selling pressure is going on and further lower prices are ahead. Looking at this chart, if the move was not this dramatic, this could have been an excellent target to short the oil stock. But however, this move has been so fast, it's not a good idea to go shorting. Rather, you can just wait for the fall to complete and then probably enter. That could happen in a week or 10 days or 45 days, who knows. But now your focus should be on this chart to have an optimal entry. I was telling that the oil market, and also look at the mountains. Right now the price is 10.04, so it's somewhere here. So the biggest resistance now is at 9.95, and if it breaches, then it's at 9.67. These are the touch points. So I'm not going to do a cover trade right now. Instead, I think the prices are heading way lower to 9.5. It's here, it's about 9 point on a daily basis, or 180 days 4 hours, it's about 9.7, and the lowest point is 9.4. So arbitrarily, this is not a scientific thing. I'm going to put an alert at about 9.5. Create alert, I'll say at or below 9.5. A possible bottom is ahead. I just put a note, so when it alerts, I will know. At that time I will come and revisit this chart. So even though I have not entered any trade here, I am actively monitoring this stock, and so that's as good as or closest to being in the trade without putting your money. I have some updates on this trade or this possible trade, and let's jump right into it. Recall that I was mentioning that triple distribution represents, to the downside, represents a strong down day, and which was validated in the next couple of days. Look at it. The next day, that was a complete inside day right in the bottom, and two inside days, and then what happened? It could not break and go up. It just went down completely, even almost outside the triple distribution day, which means still the selling has not reduced, and it tried a recovery and then back again. So the trend continues. So now it has gone down substantially, and let's look at the mountains. And the stock price is right now 9.86, so it's somewhere here. It is, that's why it's holding on. If it breaches, then the next point where it can stop could be 9.7 or 9.6 or 9.61. We had put 9.5 as a point where we want to enter on a long side. But now we have some reference where I want to, if it does not go to that bottom levels, we should still enter. So what do I do? This is again arbitrary. Look at this point where we have, there's a point of control 1, 2, 3, 4, 5, 6. So what I'm going to do is I'm going to put an alert here at or above, go long if it breaches here. So now I have put an alert. Basically, if it has successfully breached all these point of controls, recall that I mentioned a point of control is where a lot of people have, or even a value area point of control is where a lot of people have inherent interest to keep the stock down, because now it's in a downtrend. If it has breached here, then that means most likely the trend has resumed and your covered stock will likely work. So just to recap here, see, this is our point. So if it goes below this point, I will go long, or if it goes above that point, I will go long as well. If you notice it, what I'm trying to do is I missed the move to the downside. So I'm trying to capture the next move to the upside whenever it happens as quickly as possible without getting on the wrong side. So this is the bigger lesson that you should take. It's not about a covered stock or a strategy or anything. The analysis that is going through here tries to capture an early reversal. So once it's reversed, who knows, you might not want to do a covered stock, you might want to do a straddle, you might want to do a strangle, you might want to do a calendar. Any other strategies are the least important things in my opinion. It is just the difference between driving a Honda Accord or a Toyota Civic or any other cars. The point is you should be a safe driver. Once you're a safe driver, it really does not matter much as to what strategy you can pick up. And although this strategy that I'm referring to is a covered stock, at a higher level, all I'm showing is trying to capture a move to the upside as early as possible.